Welcome back to another episode of Word Wednesday. I'm your host, Paige Goodger, and of course, we have Bix Weir. How's it going, Bix?
It's going all right. We're fighting the fights, and I'm happy. Every time Word Wednesday comes around, I'm very happy.
Me too. It's my favorite day of the week now. So, our word for this week is rehypothecation. And we are first going to dive into some words that you need to understand before getting to rehypothecation. So we're first going to dive into hypothecation, and I'll give you my definition on that. Vix will give you his definition, and then we'll go from there. So my definition of hypothecation is hypothecation occurs when an asset is pledged as collateral to secure a loan without giving up title, possession, or ownership rights, such as income generated by the asset. So essentially, a loan is made on a hypothesis that if someone fails to make an interest payment, the bank can go take possession of collateral. So what's your take on this, Vix?
Hypothecation, just the strict definition, is really a secured loan. And a secured loan is like a car loan, a collateralized loan. It's a house. It's something that if you don't make your payments, the lender can come back and take the asset that you borrowed that's being secured and then sell that off to pay off the balance or whatever they want to do with it. A hypothecated loan is basically, it's a collateralized loan or a secured loan.
So now we're going to go into what collateral means. My definition of collateral is something pledged as security for repayment of a loan to be forfeited in the event of a default. So it's an item of value used to secure a loan and acts as a form of protection for the lender. So if I wanted to go get a car and I needed a loan to get that car, my car is now collateral for that loan. So if I don't repay my loan or I don't keep up on my monthly payments on my loan, the bank can now take my car away from me.
The idea would be the bank would take the car, sell the car, and take the proceeds from that sale to pay off the balance of what you owed them. When you have a car loan, that it's in the bank's name, it's not in your name. So it makes it easy for them to go in, take the car away from you, and then use the proceeds to pay off the rest of your balance. It's a way to facilitate lending when the underlying person looking to take out a loan doesn't have good credit or doesn't have strong enough credit to just do it on their own.
So now that we know what hypothecation is and we know what collateral is, rehypothecation is simply hypothecation of an already hypothecated asset. So you're taking the collateral of one individual and using it as collateral in another hypothecation. So the repledging of collateral.
That's it.
What do you have to say on the matter?
You know, as crazy as that sounds, that's what it is. And that's the craziness of banking these days. In this situation, it would be an asset that has value, is being already pledged to one loan. And because the lender holds this asset as collateral, they said, well, I can use this and pledge it somewhere else. So I can use that as my collateral. It's basically saying to the world that just because I have possession of the asset means I get to do whatever I want with it, which is not really true because that asset has a pledge against it based on what the loan is. So that's the rehypothecation part. It's an asset. They have title to it. You have ownership because you're paying for it. And then they send it off to somebody else who has a claim on it. And then you've got basically 3 claims on a single asset. Because the regulators are very lax on what happens to paper ownership of anything, it has gotten completely out of hand. And it happens at every level of government. So it is crazy. It is out of control, but it's what the bankers do.
Yeah, so that leads me to my next question, which is how is rehypothecation possible?
Although these banks and lenders are all regulated by the SEC or the Federal Reserve or different regulating entities, nobody checks the paperwork. You can open a file at a bank and say, oh, this is a regular home loan to this individual, and that's all it tells you. Well, in a different file on a different floor in a different department, it shows, oh, this house was pledged as a mortgage-backed security in this security, and money was collected here, which was invested over here. So the collateral isn't being perfected. You had to perfect the collateral to make sure there's no other claims on that collateral. That's the problem with a lot of this banking stuff is, although the rules are fairly good, not great, but a banker will always figure out a way around them. That's a major in college now. It's called financial engineering.
Wow.
And yes, it's insane. And but that's what they do. They say, how can I make more money with what I have? The funny thing is, every time there's a banking collapse or something happens that goes wrong with a bank, they add on more regulations. All that does is it gives them a framework of something to get around. Instead of some general rule that says you can't lie, you can't steal, and you can't cheat. That way, if they had a rule like that, it would be okay. It's not subject to anything but interpretation.
It would kind of cover all the bases if we just went with the one rule.
Nobody knows who owns what anymore. And that's the problem that goes back to the DTCC that's supposed to settle all these trades. They don't settle any of the trades anymore. And it's completely behind the scenes of the brokerage houses is complete mayhem right now because nobody knows who really owns what, because everything is rehypothecated.
So why is rehypothecation used in our current financial system? Is there a benefit to rehypothecation, specifically a social benefit of any kind?
I don't see any social benefits from rehypothecation. This is more big, huge manipulators trying to force the price in a certain area so that they can make an extra buck. And with rehypothecation, it's all about making the extra buck. And the regulators are not on top of this at all. It's kind of like musical chairs. They're banking on that the music doesn't stop. And they can just keep churning this machine, and no one checks this. And there's so many trades going through the system. Nobody checks on collateral. They say, hey, I'm only going to need this asset for about 6 months over here, so I'll pledge it over here. And nobody thinks the music's going to stop. Now we're at a point where the music's about to stop. And that's what everybody's afraid of in the brokerage industry, at the DTCC, at the SEC. They're afraid that the game is going to end, and there's no solution. There's no real solution to this rehypothecation problem.
Are there any problems with rehypothecation? And are there any economic consequences of rehypothecation?
Big problem that I see coming down the pike is that the people who do this kind of rehypothecation are usually these big banks. They call them too big to fail banks, meaning that if they do fail, it would take the entire global monetary system down with them. And that's what the problem is. That's the big social problem is these bailouts keep happening because they are afraid of the consequences of the failing of that system. Because these too big to fail banks are they are so connected with everything we do, from our government to our politicians, to loans, to your family, your friends, to the companies you use, and they're all intertwined, loaning with each other, have derivatives together. They're all in bed together. They cannot fail or the whole system will fail. But that also gives them a license to cheat because they know they can't be allowed to fail. So they go out and do the same thing over and over and over again. And that's the ugly cycle we're at now. That's why I've been such a big advocate of let them fail. Let the whole system go down and we can rebuild on something based on true assets, true money, and not based on the rehypothecation of everything that is not nailed down.
So just to recap, I'll take it all the way back to hypothecation. So hypothecation occurs when an asset is pledged as collateral to secure a loan without giving up title, possession, or ownership rights, such as income generated by the asset. And then next we had collateral, which is something pledged as security for repayment of a loan to be forfeited in the event of a default. And finally, we had rehypothecation, which is the hypothecation of an already hypothecated asset. So you're taking the collateral of one individual and using it as collateral in another hypothecation. So the repledging of collateral, which in turn makes the brokers a ton of money.
Yes, and that's it. And that's the basis of it is they're trying to use the same asset over and over and over again to try to do the same thing that they did the first time. And that's when it gets a little squirrely with a whole bunch of different people, a whole bunch of different credits, and no real a real grasp on who owns the asset at the end of the day.
It seems like the most realistic thing to do with a system that allows rehypothecation and fractional reserve banking to just completely implode and start something new. Because how could you not? It's just this chain link of people who own other people's things.
Yeah, that's why it's got to all be destroyed and then start again with something realistic like blockchain. They're trying to put blockchain in there now, and you can't because it's so messed up already. So you got to get rid of the past if we're going to move forward at all, as far as getting some kind of reasonable asset transfer, ownership transfer going on. And right now it's a mess. This is the reason the Federal Reserve has been allowed to fester for so long, is that everybody's afraid to end the system because they know the chaos that will ensue. Even if everybody agrees it's a completely criminal system and there's no way to fix it, they're rather kick the can down the road a mile or two than pick up the can, throw it in the trash, and then build a new can. The only reason they have power is the control of the money system. And when that goes away, they are powerless, and the people can take the power back. But the only way to do that is get the money out of their hands by destroying the whole system. I highly recommend buying cryptos and silver because they're non-rehypothecated assets that you can hold in your own possession. It doesn't matter what happens to the banks. If you own those assets, crypto, silver, gold, house, a car, with no bank attached to it, those are the only things that are going to survive the crashing of the banking system. Have it in your own possession. If you can't touch it, feel it, or see it, you probably have a risk of somebody else taking it.
Be your own bank.
BYOB, absolutely.
Well, I think that is a great place to wrap up for the Rehypothecation Word Wednesday. And thank you, as always, Bix, for coming on and sharing your expertise and giving the fans a little behind the scenes of what the hell you mean.
I love it. I love these. I look forward to them every Wednesday. And people are telling me, oh my God, I didn't know that's what you were talking about when you say these certain things in my show. So thank you for doing this, and keep it up, Paige. Keep working it.
That makes me happy because I love them. I love your message, and I just want to bridge that gap between what you talk about and what the everyday person knows about this entire system, because they make it tricky for a reason, and I want to make it less tricky and make it more accessible for everybody, because it's a system that we live under, and it serves you to know about the system to eventually fight the system. So thank you, Bix. Thank you, everybody, for tuning in. And I cannot wait to see you guys next week with a new word. Very excited. So be sure to tune in, and we'll see you then. Bye.